So, in this video, we will be discussing the second question of our long answer question. Let's look at the question. The second question is, discuss the main provisions of Indian Partnership Act 1932 that are relevant to the partnership account if there is no partnership deed. Very important. If there is no partnership deed, what will happen? We have already discussed this. We have written it earlier also. Let's write it down here. So, the second answer is rules in absence of partnership deed. Rules in absence of partnership deed. First rule is of profit sharing ratio, that will be equal. We already know that profit sharing ratio, profit and loss sharing ratio will be equal. Second in it will be interest on capital, interest on drawings, both no interest on capital, no drawings, interest on drawings. 3, salary, commission, okay, this also no salary, no commission. Then important one, fourth one, interest on partners loan at the rate of 6% per annum. So, interest on partners loan at the rate of 6% per annum. These are the important ones which we need to remember. Okay. Now, let's move on to question number 3. Question 3, explain why it is considered better to make a partnership agreement in writing. We have already discussed this. Let's again write it down. Where we have written this? Yeah, this one. This entire one, the answer is same. Okay, you may write the same answer. Same answer as question 2. Short answer question. Then question 4. Let's look at it. Illustrate how interest on drawings will be calculated under various situations. So for that, we have already made the big account, big statement. So let's do it. Calculation of interest on drawings under various situation. Okay. Now, formula is total drawing in the counting year multiply by rate upon 100 multiply by period upon 12. And this period, how we have to do this period calculation? This period calculation we already did. Okay. So that's the same thing. Monthly, quarterly, annually, beginning of the month, middle of the month or a quarter, end. So, for this, so, how we used to do, what we used to do, we used to take the, for how many days or months or quarters the money was used. So, if I am withdrawing amount at the beginning of the month, okay, and I am withdrawing same amount, equal amount every time. This is in case of fixed amount and fixed period. So, let's write it down first. I forgot to write it down. When fixed amount and fixed duration drawings. So, amount is also fixed and duration is also fixed. Then what will happen? Then openings, if I am beginning, then monthly. So, the first drawing I will make will be on 1st of April. So, this 1st of April money I am using for the entire 12 months. So, 12. Okay. Then the last drawing, first drawing plus last drawing upon 2. Last drawing for how many days I am using? Last drawing I have done on 1st of March. Okay. So, for entire 1 month upon 2, 12 plus 13 yani 6.5 month is the period. In the middle, if I am doing, so the first drawing I made, okay, will be on 15th of April. That means I use the money for 11 and a half month. And the last drawing I must have made will be on 15th of March. So, half a month I use the money upon 2. That means 6 months. Okay, and then if I'm withdrawing money at the end of every month, then what is happening? The first money I withdrew will be on 30th of April. So this money I used only for 11 months in the accounting year, and the last money I must have withdrawn on 31st of March. So in the accounting year, I use it for 0 days. So for how, what is the period? 11 plus 0 upon 2, 5.5 months. In the similar way, if I am withdrawing quarterly, there are 4 quarters in a year. Okay, the first quarter begins on 1st of April. So if I withdraw money on 1st of April, the total will be 12 months. I use this money for 12 months. The last money I withdrew on 1st of January. That is the beginning of the last quarter, accounting year wise. Last quarter is January, February and March. So this money I used for 3 months. So 12 plus 3 upon 2, 7.5 months. Okay. Again, I am withdrawing in the middle of each quarter. So first quarter middle is April, May, June. Either on the 15th of May is the middle, right? So I use this money for 10.5 months plus the last I must have withdrawn on 14th or 15th February. Okay, the last quarter middle is I use the money for 1.5 months upon 2, that comes to 6. Always remember that in the middle the answer will always be 6, and in the end, okay, I am withdrawing money at the end of first quarter, so I use the money only for 9 months, and the last withdrawings I made on 31st, last day of the last quarter, that is 31st. So I used 31st March, I used it for 0 days upon 2, that is 4.5 months. Last, annually if I am withdrawing money, okay, so not annually, it is semi-annually, okay, because if annually only one time I am withdrawing, so that whenever I am withdrawing, that is the case. So if I am withdrawing money semi-annually, okay, half yearly you can also write. Half yearly. Then if I am beginning in the first half year begins on 1st April to 30th September. So I use this money for the entire 12 months. And the last is only 2 drawings are there. So last will be for 6 months. I am withdrawing on 1st of October upon 2. That comes to 89 months. Okay. If I am beginning, I already know the answer is 6 months. But let's see how this 6 month is calculated. I am withdrawing in the middle of the half year. So first half year is April to September. The middle is either 30th June or 1st of July. So I am using the money for 9 months in the year, and the second half of the year is 1st October to 31st March. The midway is either 31st December or 1st of January. So I am using the money for 3 months upon 2. Okay. The answer will be 6 months here also. Got it? And if I am withdrawing at the end of the half year, so first half year ends 6 months I am using, last is 0 upon 2, it comes to 3 months. This shortcut will only happen, will be used in this formula only when the amounts are fixed and the duration of withdrawal are also fixed. Both the condition should be there. Okay. Now we will discuss when amounts and durations are not fixed. What will happen when amounts and duration are not fixed? So when amount and duration, amount or duration, okay, either amount or duration or both are not fixed, what will happen then? Let's see what will happen. Okay, then we just have to use our product formula. Okay, the product formula says that normally the formula that we have to calculate year wise, whatever is the period. So the will be total drawings multiply by rate upon 100 multiply by period. Okay. This is how for each drawing we have to calculate. This is it. Yes. Now, see, when date of drawing is not given, when what is date of drawing is not given, then the period will always be 6. Okay, so we'll write down 6 upon 12 for half year. These are the situations that I see. Yes. Okay, in our next video, we'll be discussing the next question of it. Thank you.